you guys, Freaky Finance here. In this video, we're just going to do ASML. They actually reported a couple weeks ago, but I figured I'd take today to do a video on a company I just started on, and kind of my thinking behind it, and then what I'm excited for, because they have an investor day coming out next week. So, and then it kind of picks up tomorrow with got Celsius, CVS, and Cedar Fair. It'd be interesting too to look at. I mean, it's always interesting to look at Barrick, and there's quite a few other ones. I know I got like 10 calls to listen to on Thursday, like Pinterest and Airbnb and a bunch of other ones. So be an exciting week. Again, Wednesday and Thursday seem to be the big earnings days. But anyway, let's jump into ASML. Now, I do own ASML. I just picked it up actually, and part of this is actually from some of the China proceeds. So I kind of just roll it in, as well as some cash to work. So ASML, you can see here I own 7 shares in TFSA at $675. Still not cheap by any means, but the company is interesting. Usually what I do is I start positions and I slowly add to them as I get more conviction. Sometimes I go up too quickly before I get conviction. That's fine, and other times I usually have time to dig. But I did see the investor day next week, and I was like, oh, maybe I should take advantage of something anyway, because it has pulled back a bit, and the business is interesting. So ASML, what I'm excited for is the EUV side, because I followed enough foundries now to know just how important this technology is. And you can see these big kind of cans here. The latest one's the 3800E, and these things can go for quite a bit of money. So they're relatively working capital intensive. Basically ties up a lot of their cash flow until they sell it. It takes a while to build them. Then they sell it, then they can realize it, get it off the books, and make profit. The margins are pretty good on the product, and the sales have been pretty good over time. EUV is basically a way that all the chip manufacturers are getting lower and lower density for their transistors. It's been this way for a while. It's actually one of the reasons why I think TSMC leapfrogged Intel, was because of just how powerful the EUVs were getting, and how really ASML, I think, was quarterbacking TSMC, which is now quarterbacking NVDA, AMD, Apple, right? All these chip developers are using TSMC's foundries, and those foundries use ASML's EUVs. So it's kind of an interesting neck there. Again, these are just images of what I'm excited about, right? We're down to 2 nanometers now for logic nodes. So that's kind of just some backstory. Again, we're not going to a full deep dive today, but we will at some point, I think, specifically after Investor Day, when we get more information on what they think the future may look like. I do want to point out, though, that it is important to note that concentration risk here. In 2023, 53.9% of sales were made up of 2 customers. So it's there's only so many customers that make chips in the world. It's actually one of the reasons why there's such a support from governments to try to secure up their own chip supplies, is because really there's just TSMC, Samsung, and Intel as actual foundry makers, right, for chips. So there's not too many out there, and ASML is basically, I mean, there's only so many customers for them. There's only really 3. I mean, when I go to ChatGPT just to ask, like, who are the biggest customers, it's TSMC, Samsung, Intel, and SK Hynix. Supposedly the 3 of them together are over 80% of sales for ASML, so it's very important what these companies do. One of the things I do know they're doing is all spending more on foundry, specifically in the US and in Europe, because all these countries are trying to secure their own supply chain. And I think ASML will benefit from this, because what they're going to do is the capex spend will eventually find its way into ASML's order book, because these things, the products that ASML makes, are so critical to the next age, to get the density even better. And I just think it's very likely that ASML is going to benefit. And just to give you an idea of how much one of those cans cost, EUV systems, $180 million per unit, and that's probably only going to go up with the more advanced ones that are coming out soon. In terms of the share price, we've seen it pull back finally a bit, right? On a 5-year, it's still up 150%, but on 1 year, it's only up 6. So it's finally pulled back to a price that's no longer crazy high. It's still expensive, and it's expensive because you can see the business has gone from 7 billion to 30 billion year over year, right? So a material amount of improvement. You can see the earnings per share go from $4 to $21. You see the share count start going down as they start using cash to buy back shares. So they're doing the things that I like to see. Obviously, it's a very big growth story, and you can see the EBITDAs go from $2 billion to $10 billion, right? So very strong growth over the last decade. But again, you can see the geography is China, Taiwan, and South Korea. It's pretty much the bulk of their sales, right? You're talking about 77% of sales from those three places, with USA only 21%. So it's very APAC region dominated, very like TSMC and SK Telecom, or South Korea rather. I was looking at SK Telecom before I jumped on, but anyway, you can see very APAC dominated, EUV dominated as well, which is growing over time, which is higher margin product. Then we have seen the dividend increase as the cash flow increase and sales increase. And more importantly for me, we've seen the share buyback start ticking up and starting to chunk into the shares outstanding, right? Went from 430 to 394. So it hasn't been that big of an impact, and part of that is because the share price has always been relatively high. So the buybacks haven't had that big of an effect on the shares outstanding because this company's always traded relatively expensive because the growth rate's been relatively high. And obviously they have a superior advantage. Now, they're going to do another investor day next week or 2 weeks from now, but they are expecting gross margin to improve over time. Now they're only expecting 51 to 53% by 2025, so next year. Part of that is the newer model, the 3800E, is better gross margin than the 3600D. So the 3800E better than the 3600D, and the 3600D was better than the 3400C. And the better the product, the higher the margin. And that's been the trend for a while now at ASML. What else is there? I'm trying to talk really quick. Again, we'll go into more details on the investor day, but you can see one of the things that impacts free cash flow is the higher inventory. So when we go to, say, statement of operations, start cash flow, you can see cash flow from operations, so it's profitable, add back depreciation, and you can basically see net cash. But net cash, it's relatively low, and it's always under pressure because the changes in asset and liabilities. And then we go to, okay, what's the working capital noise, which is what that line is. And we go here, and you can see inventory only goes up. Basically, ASML has to build all these things and then sell them. And building these big things that cost $180 million per unit can make it very ties up a lot of working capital. So you can see that, well, the net income, right, $8 billion, and back depreciation of $1 billion, $9 billion, but you're putting 4.5 of that back into inventory, right? And then you're left with 5.9-ish. And then you have capex as well because you're expanding your own production to build more units, right? So a lot of that goes back to capex, right? And then you have the dividends, which the dividend is not that big because the share price has been so high and high multiple for so long, but we are seeing a decent amount going to dividends, and then whatever's left over tends to goes to share buybacks. That's kind of how they've run it. The balance sheet, otherwise, it's relatively fine. Just it's high inventory is what I'd say relative to other companies we've looked at. Basically $5 billion CCE. You have $5 billion long-term debt, or less than that, right? And you have $1 billion in equity methods. So overall, not too shabby. I mean, there's nothing really there on the balance sheet to get too excited about. It's worth bringing up the working capital drag on the business because it does have to build the things before it sells them, and the things are so expensive to make that it makes it relatively, in my mind, it can be difficult to manage, especially during a slowdown, right? Because you're going to build into a slowdown, so you're going to see inventory shoot up while you're going to see order booking slow down, which is what we're seeing now, right? And we don't know how cheap it will get because it's never been that cheap because the growth has generally been there. So, and one of the things, so like why ASML now is because I think one of it will be AI and how important it is, but another thing is just the fab openings that are planned by customers. And again, talking about TSMC, Intel, even if they delay them, it's just there's a reason why all these countries want to secure their own chips, and chips are only going to be more important in the next 20 years, right? 10, 20 years, 30 years, until something better comes along. But right now, it's like that's what it all runs on, and ASML is the quarterback really, and technically it's a quarterback for TSMC too, right? So the more advancements that ASML can make, the better the whole industry will get. And I do think all the capex planning for all these the Intels of the world is supported by the governments because they all want that, which means indirectly ASML is getting supported by all the world's governments. I think that's really the gist of it. Now look for more information on November 14th, but I wanted a shorter video today, and that's kind of my thoughts on it. Honestly, when I start a position, I just have an idea. I look at it and say, okay, this looks interesting. Obviously, I always want a better price, but it's starting to be a relatively good price for ASML, and a part of that is because the growth has slowed down. Right, it's pulled back from almost I didn't even think it was that high, over $1,000 to $680, right? And on a 5 year, it's honestly been relatively flat since 21, right? It's kind of the bubbly period. It's cheaper than that still, even though the business has grown relatively well in that time period. Right, it's still gone from 22 billion to 30 billion, right? From 15 to 30 on a 4 year. So it's still growing relatively strong, though it is very dependent on 3 customers, which is always interesting. But anyway, I like to hear your thoughts on ASML. I'm going to do more work on it once we get more information on Investor Day, but I love going through these things ahead of time. So take care and have a great rest of your day.